Good day, traders and investors. Roger Scott here, senior strategist of WealthPress. Today is Monday. It's June 12th. Big week ahead of us. I hope everyone had a great weekend. And remember, like our channel, YouTube WealthPress channel, subscribe to our YouTube WealthPress channel, and post comments there. I respond. I like to respond and interact with you guys. And if you don't get your answer, send me an email, support@marketgeeks.com. Let me know how you're doing. Let's get into today's analysis right now. Now, as you can see here, the Nasdaq is up 74, pretty good for a Monday. The Dow's up 42. You do have some earnings today that are coming out. Now, this is the implied volatility and the earnings chart. So you could see today you have Oracle coming out. The volatility that's expected either to the upside or downside is about 7%, which isn't a lot for a tech stock, especially Oracle. Tuesday, nothing on Tuesday. Wednesday, you got Leonard Homes. Thursday, you've got Adobe and Kroger. And Friday, you have nothing. So it's not like we don't have a lot of good stocks. We don't have a lot, but we have quality stocks that have pretty good market cap and leaders in their industries like Adobe, Kroger, Leonard Homes, Oracle. These are all fairly big companies. It'll be interesting to see how tech software does. Tech hardware, like chips, have been doing really well. It'll be interesting to see how software and other parts like networks do this week, because Oracle is network and Adobe is software. So it'll be a very interesting week. And you could see here 4.7 in Leonard Homes, not really a lot. Kroger 5.8, Oracle 7. That's the implied volatility that's expected on the movement of the underlying stock up or down based on what the analysts are seeing in the price of the options. So that's baked into the price. So if you think Adobe's going to move 15%, it probably would be a good idea to buy options. If you think Adobe's going to move 4%, it would probably be a good idea to sell at the money options. Again, I'm just giving you the volatility and I'm showing you what's on the table this week. In terms of Fed data, oh boy, don't have a lot today, thank God, because we've got a lot the rest of the week. The FOMC meeting begins, which means bonds and the stocks will be kind of starting to get a little quiet in anticipation of the meeting. You've got CPI tomorrow. That's going to be a big report. As everyone knows by now, we look for X food and energy, and I'm expecting this number to be lower. If it's not lower, we've got problems, but I'm hoping the number will go down to 5.3 or 5.2. Anything below the 5.3, even 5.3 would be okay, but X food and energy is what you want to look at. You want to look at the core, because this is what the Fed looks at. Very, very important. Then you've got the PPI in the morning on Wednesday. And again, you're looking for a lower number where anything 2.9, 2.8 is good, 3.1 is no good. It'll be interesting to see what the Fed has to say. And then Mr. Jerome, Mr. A.K. Squirrely Powell is going to be talking at 2 p.m. about whether or not they're not going to be raising rates. And the odds are right now that they are not going to be raising rates. Keep your eye on the bond market. If you look at the bond market over the last several weeks, this is weekly, it's been going between the 109 and the 100, 109 and 100. And right now it's at 101.82. And I'm assuming if the Fed doesn't raise rates, and the odds of them not raising rates is about 75%, I'm expecting the bond market to give us a little bit of a rally. I think it bottomed out right here, and I think it's heading up. It went from oversold back to overbought, and now it looks like it's coming back up. But this looks like it's a bottoming pattern, not like a pattern that's ready to go lower. I can't see it going too much lower, especially if the Fed does not take any action. Because remember, lower bonds means higher rates. If the Fed doesn't do anything, that means status quo. That means bonds would get a little bit of a relief rally and probably start going back to the upper end of the range. Another major factor, aside from the earnings on Oracle and Leonard Home and Adobe and Kroger, aside from the CPI and the PPI and the Fed data, you've got something going on here. You've got Apple, the biggest computer, well, the second biggest company in the world behind Microsoft now. I thought it was the first, but Matt reminded me it's the second. This is a weekly chart. You could see how overbought Apple is on a weekly basis. More importantly, it's starting to break through all-time highs. So the question is Apple going to continue moving higher or not? Based on the technicals right now, based on what I'm seeing, I don't think so, and I'll show you why. Because if you look at info technology, you will see 78% are trading above the 50-day moving average. Look at where this number is right now. Starting to peak out here. That's the 50-day. Now look at the 20-day. See how it's starting to curl down a little bit, and it didn't reach this level here, which means less stocks even than 3 weeks ago are making highs, that's a very, very bearish sentiment. And I just don't think Apple has more market cap to go in it right now. I think we need to wait and see what happens. But I don't see technology being as strong. I think we're going to get a lot of shakeouts right now, and then we're going to be going back down. Also, another sector that looks to be a little bit overbought in the short term is the energy sector. It looks like it could be ready to cool off a little bit as well, and there's some negative news on energy stocks. Now, let's talk a little bit about the whole nitty-gritty and talk about what's on the news, and then I'll talk about what to look for, profits, opportunities, sectors to watch this week, and all the technical stuff we look at. I already told you about bonds, but we'll talk about stocks as well. But be cautious with technology. Last week, they didn't really rally too much. They just kind of stayed up at their level, but it's just too much too fast right now. So market participants are looking ahead to the latest U.S. inflation data and the Federal Reserve's interest rate decision this week. That's happening on the 14th. Thought it was happening on the 13th. It's happening on the 14th. Good to know. Now, S&P 500 made a 9.75 month high on Friday. Dow posted a 5-week high, and the tech-heavy Nasdaq port made a 14-month high. It's just a little too fast, too much. Regional banks, which were short right now, lost ground, with Comerica and Zion Bank dropping more than 3%. And I think there's more downside. I don't think we're done with regional banks. I think there's a couple of more stories, a couple of more shakeouts, a couple of more consolidations. I'm playing the numbers game here, and overall, I don't think banks are in a great position right now. Oil prices fell more than 2% on Monday following remarks from Iran's super leader indicating the openness to a deal with West regarding its nuclear program, while concerns over China's fuel demand growth also weighed on the market. China's not doing well. That's really weighing on the energy sector, and the energy sector is not responding really good to shortages of energy. Matter of fact, last week we had a report that OPEC is making cuts. And here's what happened on that news. So I'm not really all that bullish on the energy sector, especially in light of what's going on. Also, the short-term RSI is curving down. I think we're going to see more choppiness and downside. We're already down 68 ticks this morning, and the market hasn't even opened yet, and it's up. So just keep an eye on banking stocks. Let's see how KRE is doing. That's the regional banks. Sorry, I don't mean to jump back and forth. Up 25. Also overbought here and coming down. But we'll see what happens with that one. But those are two sectors I'm not really bullish on right now. So oil prices are down. They're open to making a deal. The East is open to making a deal with the West, and China's demand. China is a huge consumer of oil. And if China's not moving, So this week we're going to have interest rate decision for Mr. Squirrely, who says one thing during the minutes and then says another thing publicly to people. I gotta tell you, this guy is not on the level. Right now, there's a 77.6% that there's not going to be a rate hike, and I think that's going to hold. Only a 22.4% chance that there will be a rate hike. So I think the bond market is going to get a little bit of a reprieve. As I mentioned, you've got CPI, core CPI, PPI, core PPI. Those are the big reports this week, followed by retail sale. But I don't think retail sale is going to be as important after PPI and CPI comes out. That's going to kind of tell us what's going on. Europe is up this morning, and as investors are geared up to see the U.S. government not raise rates, consumer products and automobile stocks are leading the overall market higher. Keep an eye on that because I'd like to see that in the U.S. as well. China closed lower. Chinese property stocks plunged on Monday after investment bank Goldman Sachs, said in a note on Sunday that the country's property sector is expected to grapple with persistent weakness for years. That does not tell me that China is doing really well right now. And remember, China is a major contributor to our export and our import, so especially our imports. So we got to be really cautious, especially with energy, industrial stocks. There's a lot of stuff that's made in China. At the same time, Japan index closed higher as investors straightened bets for the Bank of Japan to leave ultra-loose policy unchanged. That'll be interesting. Data on Monday showed that the country's wholesale inflation slowed for the fifth straight month in May due to falling fuel and raw material costs, putting less pressure on the Bank of Japan to tighten policy. But I do think they're going to be tightening policy just a little bit later, not right now. We need to see how a U.S. economy goes because that's a major factor for Japan. But with their new prime minister, I think they're going to change their economic policy significantly over the next couple of years. Energy stocks and energy service providers are falling, with crude oil, Oxy and Marathon down 1%. Oracle soared. They're having earnings today after Wolf Research upgraded the stock to outperform. Remember, earnings on Oracle today. I think it's today, right? Let's see here. Yeah, it is today. It is today. Adobe rose 2%. So that's one of the reasons why technology is looking pretty strong right now. After Jefferies raised the firm's prices on target from 530 to 530 from 440. That's significant. And Carnival, my wife tried to book a cruise trip for my parents and my youngest daughter, and they're booked right now. They are booked. I don't think she went with Carnival, but they're all pretty booked. She has a friend who's a real estate agent. She says that people are just going into cruise ships like there's no tomorrow right now. So we got to pay attention to them right now, like Norwegian, Carnival, and so forth. Oracle earnings are on the table today. We're going to have to pay attention to that. Now, looking at ETFs, I want to explain to you what I'm seeing right now. Financial stocks can get a little bit of a breather, assuming there's no nasty banking news. I'm seeing they're near a breakout level, but honestly, looking at XLF and looking at how it's looking right now, I would put more money on the fact that it's going to go down and come down than break out from these levels. I think this congestion is going to hold over the next several months. So maybe not several months, but several weeks. And with it being overbought right now and not really showing anything up here, I think we're going to come down on that sector. Now, energy sector, as I mentioned to you, momentum levels are also turning bullish. I think energies are going to come down a little bit. I'm expecting a little weakness in energies. Utilities, I think, are going to be choppy for the next couple of weeks because remember, if people are not buying, if interest rates are not going up and they're staying firm, that could increase a little demand in utilities because of why do people buy utilities? Dividend yield. So there's always a competition. But interest rates are pretty strong right now, and yields from bank stocks are pretty firm. So we may see utilities and energies in the same ballpark. Healthcare I'm liking right now because I think a lot of the money coming from the technology is going to go into healthcare and more defensive sector. Like this, I do not see holding up nearly as well as healthcare over time. Same thing with the communications sector. Industrial sector already broke out. The question is it going to come down back to the base? And unfortunately, I think it will. I think this week is going to be choppy, and we're going to undo a lot of the things we saw last week. Consumer staples, on the other hand, are starting to base out. I like consumer staples, and I like healthcare again, and I'm turning negative with real estate right now because of banking stocks. Consumer discretion, I think, is topping out right now, and basic materials, I think, are coming down because they couldn't reach this base. Overall, I don't think blue chips are as strong as a lot of investors and traders think they are. And also remember this, we've been in a choppy market, choppy. We're not in a breakout market, and I'm not seeing any major catalyst causing us to break out from these levels. So I'm expecting the market to start turning down, and the fact that we're opening higher is not a really strong factor. Remember, usually when markets open really, really strong, they go down. And when markets open up weak, they go up. That's just how it works in bull and bear markets. So the fact that you're seeing consolidation in the Dow, the fact that you're seeing consolidation in industrial stocks that are not really breaking. See, this is industrial stocks. Look at that. Overbought. Basic materials. What am I doing here? Basic materials are also in that same ballpark, you'll see. Even worse. We're in a downward trajectory here with overbought. So basic materials, industrial stocks, energy stocks, they're just not looking all that great. And again, see that coming down from this consolidation. Again, I'm not seeing the Dow break out into major levels right now. The only thing that's pushing the market higher is technology. And as I mentioned, even Apple is playing with all-time highs, and there's no major catalyst right now to break out. So I think we're going to see some downside in technology, some consolidation, and maybe a little bit bearishness this week. Keep your eye on the bond market. It may rally or continue to consolidate in light of what we're seeing. But if the Fed doesn't raise rates and start becoming a little more bullish, and saying, I think they're going to just kind of wing it and say, well, we'll see what happens in the future, and give people the implication that they're not going to raise rates in the future, where the odds of that are practically zero. But what do I know? But this time, at least for the next 6 weeks, we are probably not going to see higher rates, which means the bond market can continue consolidating in this channel like we've been seeing between ups and downs. That's my preview for the week ahead. Be very, very careful. We may be surprised with some downside moves. I hate to say I told you so, but the markets don't always go up. And there's a lot of vulnerability, especially with the CPI and the PPI numbers coming out this week and all of the sectors starting to turn negative. Now, folks, if you've turned on the TV over the past few months, then you know AI is the hottest topic of the year. Matter of fact, everywhere I look, yesterday, 60 Minutes, this week in 60 Minutes, just everywhere you look, Apple, computers, AI. AI equals Apple, Tesla, Amazon, all the big tech stocks, which is why they've been rallying. But Wall Street's been leveraging supercomputers for years now. With AI adoption on the rise like nothing we've seen before, this game is changing, and it's changing fast. If you don't understand how it works, you could literally be left in the dust. So I've been working with a good friend of mine, Chuck Hughes, you know who he is, 10-time heavyweight trading champion, on a major project. We've been doing it behind the scenes on the down low. He promised me to secrecy, and we're going to reveal it at 1 p.m. Eastern Time today. 1 p.m. Eastern Time today, Monday. That's the 12th of June. This says 9th, but it's not Friday. It's actually Monday right now. Let's go to our futures so we could see the dates. There we go, June 12th. So it's happening today, 1 p.m. Eastern Time, right after my VIP room. Here's a little hint. We're calling this project Moneyball. That's right, Moneyball. Isn't that cool? If you know anything about baseball, then you know analytics have changed everything in the game. And we plan to do just that with our trading. You guys are going to love it. Follow the link below this video. If you can't find the link, go to YouTube Wealth Press channel, and I'll see you at 1 p.m. sharp for the big reveal. If you're looking to subscribe to my Telegram channel, you need to do that. Go to rogerscott.com/Telegram. That's where I post trade signals, pictures of my cats, free information, my morning videos real fast, and go to the YouTube Wealth Press channel and post comments and feedback, and I'll see you guys later. Bye.